Happy Monday to you as well. It is a happy Monday, at least over here anyway. So hey everybody, thanks for popping in to join myself, Steve, and Scott. Today is the 6th of March, and we have another edition of the Office Hours for you here today. But before we get into the good stuff, just want to make sure the lawyers are all happy here. So just want to make sure that everybody in attendance today is aware of the fact that we are a provider of information in the form of our lovely product, Trade Ideas Pro. Now, if you need investment advice, you need to seek out a registered investment advisor or a broker. If you need that investment advice, there's plenty of people out there that can give you that advice. So if you need it, please seek out a licensed individual, and don't take anything that we say today as a solicitation to buy or sell securities or anything else. Alrighty. So since we do have a lot of new people in the room today, I want to take the time before we get started to let everybody know that not only do we have this great technology, but we've fostered a nice community around it. And it all starts with the trading room, which is moderated every day by Barry Anderson. And he does a fantastic job keeping everybody in line as that room grows to 400 and 500 people. You know, it's quite a task, and Barry is cut out exactly for that position. So if you have not been taking advantage of the free trading room, please do so. It's easy to sign up, and it's free. And then we also are offering 4 webinars throughout the week, Monday through Thursday. Of course, today it's office hours with myself and Steve. Steve takes the helm tomorrow for Trade of the Week with Andy, and then we change it up a little bit in the middle. Hump Days Wednesdays with Dan Merkin and Brad Williams for the Q&A demo. And then Andy rounds it all out on Thursdays, and I ride shotgun with him. So keeping you entertained all week, and the trading room as well. And of course, here we're looking at Holly's performance chart, which tells me, better back it up just one hair, Steve. I'm going to pop it over to you.
Oh, sure.
Let you give us a little breakdown on the overall here.
All right, monitor 1, clean. Very good. All right, so what I'll normally do sometimes with Jamie's and mine as well is start off by talking about what's been going on in the market and looking at the bigger picture of a couple of different ETFs. And there is some interesting stuff happening today. This big old gap up day here, I believe was, gosh, I can't recall what the news was that day. I don't know if it was, no, it doesn't really matter. We had a nice gap up in the market, and sometimes, as we know, gaps are meant to be filled. So a little bit of a pullback. I'm going to go ahead and jump in right here and put in just yet another orange line to remind everybody that breakouts and gaps a lot of times are there to be backed and filled. This market has a funny way of 3 steps forward, 2.5 steps back, and I think that's what we kind of just had today. I'm going to even break it down a little bit more and show you guys. This morning, I felt like we might have been having a change in the winds. Here was our gap down this morning, and for those of you that follow me, you know that I have a couple of strategies called horseshoe up and horseshoe down. Here's the horseshoe down with the little icon there that basically shows you it's a gap down. Failure to fill the gap and then rolling back to new lows can sometimes trigger some really nice momentum in the same direction. And it felt like the market was getting close to doing that. There was our gap down. Here was our attempt to trade back up. And then Jamie's going to show you right around here, Holly started to spit out a couple of short trades, and then we actually took out the lows of the day, and I tweeted, you know, be careful, this could be a very, you know, bearish type of follow-through setup, but as it were, as it is, the way this market is, every dip just seems to be right there to be bought, and so there was zero follow-through for the most part on that horseshoe possible down setup, and our buyers came back in and brought life back to the market. And they did that at a level that I just wanted to highlight once again. Basically, their lows of the morning, we had pretty much filled the gap in the S&P from the breakout, and it makes perfect sense really to dig in here for the bulls and try and bounce off of this prior resistance is now current support. be both a breakout and also a gap fill for the most part on that one. The Qs are a little bit less conspicuous. The gap is not quite as strong as it was, but nonetheless, if we put a horizontal line in there, everything pretty much lines right back up as to where we were. The Qs, for the most part, filled the gap on the morning, and our afternoon buyer popped right back in and kept us afloat. The diamonds actually pretty strong. They did not fill the gap, so that is actually worth noting, that there still could be maybe a little bit more downside before technically the prior resistance could become current support. So interesting buoyancy and relative strength in the diamonds. And then lastly, the woeful IWM just cannot catch a break. We have talked about this ad nauseum, trying to see if we could get a breakout and get the get the smaller caps. The Russell 2000 is what this IWM tracks, and if we could get a nice breakout of the Russell 2000 smaller cap stuff, we could have another broad-based rally and keep this thing going. But for whatever reason, the small cap Russell 2000 IWM does not want to play ball. It pops out and then comes back into the range, pops out and comes back into the range. So it really looks nothing like what we've got in our spiders and our Qs. Our Qs and our diamonds. They are still leading the way, but the Russell 2000 and the low cap, smaller cap stuff is just not playing ball. So before I turn it back over to Jamie, we did have a trade of the week that actually triggered right close to the close today, CYH. I'll talk about this more tomorrow in the trade of the week webinar, but what I wanted to highlight real quickly was if you're not using a single stock window, you're kind of missing some of the action during the day. Here was a CYH on the open, never got really close to the trigger point, sold off with the market, turned on a dime, but look, really low volume down here. If you can see that volume, it's virtually nothing. And then we got into right about this part of the day, right here, the final 45 minutes. And one of the things that I like to monitor, and I discuss this with everybody I do a one-on-one session on, is we have the metrics that we can measure. Volume, 5-minute volume, where you can see CWH went out at 486% of a normal 5-minute volume candle. And I can tell you for the last half an hour, it was basically doing that anywhere from 300 to 600%, and you can see these volume spikes. So when I'm seeing a stock moving back up towards the actual trigger of 980, which is what our trade of the week trigger was, I certainly want to see volume levels in the 300, 400, 500 of a 5-minute volume candle, because that's, if you're not aware, that's what's one of the cool things that Trade Ideas does, is we've got a database on all U.S. stocks, and we can break down all those stock symbols into 5-minute intervals, and we can find out and make an average of what an average 5-minute volume candle should look like. And if we're seeing price action moving towards a trigger level, I don't want to see volume anemically at 27% or 30% of normal. I want to see at least 200% or higher. So it was a nice thing going into the close to see this thing heading towards its trigger price, which it did trigger at 980. But the takeaway here, if you guys are not using a single stock window, it's very important to use that single stock window hang on one second, and to make sure that you're monitoring the volume as we either get near a support level or as we get near a resistance level. And it was very nice to see that. Gives you a bit more confidence when you see that 5-minute volume kicking in like that. So we'll talk more about CYH as the volume of the trade of the week tomorrow, why we picked it, what it's doing, and things like that. But I thought it was worth at least pointing that out here as I was going through.
That looks like a ramp capital play, eh, Steve?
Yeah, towards the end of the day, Ram Capital, but the volume was really the key for sure. Yeah. So, all right, James, thanks you. Take it away. You want to take it back?
Yes, sir. One momento. All right, just let me know when you got eyes back on me.
I got eyes back on you.
Okay, perfect. Okay, so obviously I had these little slides out of order here. Of course, Steve just gave us that nice market recap. Now we're going to get into Holly, but before we cruise on to today's performance, just want to give everybody a little peek. You know, this is Holly as of the first of this year. So starting off with a very nice spread between us and the SPY, which is the benchmark. So things are working as we had hoped. Now, I'm going to go ahead and click on this next slide here, and what you're seeing here are my two compare count windows that I monitor on a daily basis. And to refresh everybody's memory, and for those of you who do not know maybe what a compare count window is we can take anything that we can create within an alert window and create the inverse of it, and then have these windows keep counts. In other words, there's two strategies in each one of these windows, an upside version and a downside version. So these guys keep count. So if you're familiar with what the tick metric is on the New York Stock Exchange, it's just an overall broad metric of advancers versus decliners, but it's everything in the kitchen sink typically. And we can do that here at Trade Ideas, but when it comes to what we have an interest in, we can really shrink that universe down and create custom compare accounts for whatever it is we feel is important.
Can you put that in present mode real quick? Just click that present button. Thanks.
Sure. Make them a little bit bigger. Obviously, let's see here. There we go. Now everybody doesn't have to squinch their eyes up too much. So we've got two different versions here. My original turbo breaks up and down, which basically, can you see this window here, Steve, if I drag it over?
Yep.
Right?
That's good. Mm-hmm.
All right, so we've got turbo breaks up and down, and this is the $5.4 billion market cap versions, which this guy is looking at. So every time a tick comes through one of these windows, simply keeps a count. All right. So the readings that you're seeing here are what these windows look like 30 minutes into the session. So we're going to go back to those SPY charts here in just a moment, but just kind of soak these in for a minute. Overall, we were only looking at 61% red versus 39%. But when we filter further and only look at the large cap universe of 5.4 billion market cap or higher, wow, not only did we not have 61 and 39, we had an even bigger bias, 69 versus 31. Okay, so keep that in mind. Now we're going to backtrack here. Push this guy out of the way here. And we're going to take a look at, okay, obviously this is the daily. We already know where we are there. But now we're going to look at the 5-minute intraday. All right, so if these readings that we just looked at here, we're taking 30 minutes into the open, that's going to be right here, 7 o'clock my time, since I'm on the West Coast. We get that nice and early 6:30 a.m. open. So right here, these guys are telling us something. Look, in the volume that's been done thus far in the first 30 minutes on the big caps, there's a huge, huge selling bias. But keep in mind, at that point in time, we had already taken our first leg down and we're back up here. So anytime I see numbers of this magnitude, because you can have a decent move even if the bias is 55-45 one way or the other. When you start creeping up to 60, that's a really strong bias, and anything over 60, it's pretty amazing how accurate these things can be, right? So took these readings 30 minutes in, and of course, look what happened. 5, 10, 15, 20 minutes later, we start the down move all the way to the bottom, or what turned out to be the bottom today. So those are very powerful metrics. As we say all the time, if you get proficient at watching these guys, they can really be an informational edge. Most people aren't even thinking about the market in these terms, but not only are we thinking about these things, but we actually give you ways to track them. All right, so very keen observation, and of course, what do? We come right back down here, and as we always say, we look to the left to try to predict or to try to give ourselves reasonable expectations here. Now, another interesting thing to point out here is that Holly did not even start putting on any long positions until after this bounce had occurred. So if we just kind of sort the blotter down here, we can see the two short trades, 7:14, about 44 minutes, 45 minutes in, and then one later in the day here as things progressed. And both of them worked out pretty nicely. So, Holly gets a little bit of short activity, and then once the bounce gets put in, we can sort again and see by time here, 9:06 Pacific Standard Time was her first long. All right, and that was about right here. And then from that point on, I mean, today it was pretty much like poetry in motion. And before we get on to the individual trades here, one more observation. You know, everybody, you know, two of the things you hear about most, I would say, when we're talking about trading in the markets, volume and price action. But inevitably, it's price action that rules the day, because who cares if the volume was high if the thing didn't do what you thought it was going to do, right? So volume is important, and of course it depends on the pattern that you might be trying to play, volume continuation. But today, and by the way, this is along the same vein as Steve was showing you earlier. He was showing you a single stock window where you can derive all of these metrics, including our smaller time frame metrics for volume. But of course, there's always several ways to display the same information or ask the same question. So what I have here is simply a very small top list, which is only looking at the major indices here, and we can see all the base metrics: 1 minute, 5 minute, 10-minute volume, how many units or shares traded today in these ETFs, and interestingly enough here, this entire day was extremely low volume. Average 3-month on the SPY pushing 80 million. We didn't even hit 50 million today. Almost 20 here, a little over 11 here. And of course the Dow, almost 4 on an average, only 2.5 million today. So, you know, volume is good, price action is better. But on a low volume today, to see our statistical model do what she did today, you know, it just goes to show you that statistical probability can trump even light volume because the odds are on our side. All right, so let's talk about the trades. So Holly brought to the table today 9 strategies, and all of them are long. And
one was short.
Yep, one short. Now, Steve and I were discussing this earlier, and of course Andy and I were chatting about it a few webinars back. And of course, humans, we have certain predisposed notions and tendencies. And the day that the market gapped up, I was like, okay, once again, a gap up to all-time highs. You know, in a perfect world, we'd like to see the market open, you know, maybe a small, you know,
just
gap
below.
up, gap down, and then everybody gets to participate. Well, whether it means anything or not, I always get kind of a weird feeling when we see these big gaps on the overall market. And then, of course, we can see it's just been a slow filling of the gap. And, of course, as we've talked about numerous times, Holly goes on nice tears once the range has been established. She even performed well up here. And then, of course, looking back in the last week, as we were kind of defining, okay, what's going to be the story moving forward, you know, those are what we like to call digestion days, and the statistical noise is quite high, but already we can see Holly's algo starting to adjust. So on a low volume day today, where, you know, doesn't look like anything special happened here, and then especially when we look at the volume levels, you know, things weren't the most conducive for a model like Holly today. But guess what? Everybody was thinking the waves were going to be rolling in at 1 foot. Guess what? We got some crazy wind. They were rolling in at 5 feet. And Holly was riding them all day when everybody else was out there thinking, well, I'm not even going to bother to go out today because the weather says 1 foot rollers. Why would I go out? But of course, Holly goes out every day, whether it's 1 foot or 10 feet or anything in between. And boy, today was she rewarded. Now, I like these P&L charts more and more every day, because they can tell you what to expect, kind of like our friends, the compare count windows. So whether we're looking at risk off or risk on, look how beautiful the day began. We start off barely profitable, take a little leg up, then kind of go sideways, profitable. I mean, Holly, her P&L today was like a trending stock. We could draw lines here and go, okay, range break, on up and up and up, range break, up and up and up. So for those of you who have been watching Holly for a long time, you already know what I'm about to say. For those of you who are just educating yourselves on Holly for the first time, what we notice is a lot of the times Holly will get profitable, then she'll go below. So she'll kind of go ebb and flow, green to red, as she adds positions, and those positions tend to catch, and the statistical probability takes hold. But today, it was about as pretty as you can get because there was never any of this back and forth. It was just green. Maintain this level. Bump up, green. So she was green the whole time, which that's telling you something. She's having moderate success in the beginning of the session. That means that, the statistical probability is working, so you should pay attention today and be, I guess for lack of a better term, more aggressive than normal. Especially when we notice that the bottom's already been put in on the market. Holly played it just about as perfectly as any human I've ever seen. Yeah, we would have all liked to have seen her be in more shorts, but then again, keep in mind, we're in a constantly uptrending market. So the fact that there are more long opportunities out there, not a big surprise, especially from a statistical standpoint. But let's take a look at some of the trades she put on. Now, today's just got risk on written all over it. And from risk on to risk off, there seems to be a lot of confusion in the beginning, but once you kind of get it down, it takes care of itself because we don't have to pick risk on or risk off at the beginning of the session. This is for informational purposes. Risk off, simply Holly obeying all of her rules. Risk on is simply opting to stay in the trade longer than Holly. So with more risk comes more reward. Risk off today, $1.50 on 11 trades. If you held, you made over twice as much. More risk, more reward. Now, I like to approach risk on, risk off on a trade-by-trade basis. It's easy. It makes sense. So looking at the all trades blotter here, the exit reason is always going to tell us why Holly got out. So quarterback today spit out the biggest winner. Just happened to be constructed. This strategy was also created by Mr. Gomez.
Yeah, it sounds like a football play, but it actually means it's a stock that exploded up on great volume but had a quick 25% pullback, thus the name quarterback, and that becomes the entry.
Right. So we can see here, as soon as I double click here, Holly's going to paint the chart for me. She's going to put a blue arrow right here where she called the entry. I drew a line already across from there, and then the red box is going to be telling you, okay, if we're wrong on this trade, this is where you're going to have to take your lumps. So if we just draw a line straight across, we can see never even acted like it was going to pull back. And of course, from an added observation here, I really liked this trade when it first came out because we can see right here, opening range breakout, stock had put in its high, took its little pullback, comes all the way back up. It's already out of that little channel, which I love these patterns. They're simple, they're effective. If you have a few more things behind them, what do we have behind us on this one? Statistical probability. Quarterback, we know what that quarterback statistical probability is. Anything coming out of here had a 64.4% chance of working from a statistical standpoint based on the past couple months of trading data. 40-day back test.
And the daily chart is where it really all comes together on this one.
Right. So, once we're in a Holly trade, it's working for us. Woohoo, we're in the money. Now, what are the expectations? We hate to be the guy that gets out for 25, 30, 40 cents only to have the thing run $1.40 and we left all those chips on the table. Well, all we do is we look to the left to try to figure out where the next bus stop might be or where the next stopping point may be. And we can see on this guy, he really did fill that gap, right, from way back here. So if we're trying to figure out, what might
Look
be
at
the
that.
next
Yep.
junk, there you
That
have
was
it.
support. That was support right there on the M, way back then. That's where that support line was, and that's where the resistance line of sellers jumped in today. But the
Mhm.
point being is one of the first things I want to look at on a Holly trade is what does the big picture look like? Start with the big picture, then zoom in. This was definitely a 52-week high happening here, and there wasn't really any near-term resistance on the left side of the daily chart. So really like the way that one looked this morning, and it was a nice run.
Yeah, and it's designed to run a 45-minute hold time right there. So we look over here, we go, well, why did Holly get out? Time stop. She took her 70 cents because one of her rules had been fulfilled. She hadn't been stopped out. Her profit target had not been hit. 45-minute hold time. She's going to close that trade out. So, Holly takes a nice 70 cents, 11:24 exit time, which would have been right in this candle right here. I'll put an arrow. All right. So Holly gets out right here because, well, that's what she's programmed to do. Now, I like to use this example all the time because let's just say we bought 200 with Holly here. We took a nice ride up, no pain. We see Holly getting out, and you're like, okay, well, tell you what, I'd like to split the difference here. I'm going to sell 100 shares here. I'm going to take my 70 cents. I'm going to give my other 100 a stop back to flat. So if I'm wrong, I don't, give any of the money that I made away. And I'm going to hold this other 100 shares because all we've had is a nice upside movement. We're getting a little consolidation here on the smaller time frames. Really no reason for me to get out of the other lot. I'm going to hold it, put my stop loss in. Had you done that, instead of making 70 cents, you made almost 4 times that amount, a little over 3.
The other thing that's nice that Jamie's talking about is it's always nice to sell when you have to, when there's buyers reaching up and buying. Selling just a little bit, what it does is it satisfies the greed and the fear demons that we all have when we're trading. We fear that the price is going to pull back and the money that we see there as a profit is going to disappear, when in reality we should be fearing that we're getting out too soon and leaving more money on the table. So in a situation like this, you've got a greed demon on one shoulder and a fear demon on the other shoulder. If you can go sell half or a third while the position's going in your direction, you'd be amazed at how much it loosens you up a little bit and takes some of the anxiety away from trading, because you basically just satisfied both demons. You made a decision and you feel comfortable moving on. You're not going to beat yourself up for not doing the right thing.
That's true, Steve. And trading is a mental game. The getting a pattern to look for, finding that favorite pattern. Not the easiest thing in the world, but not rocket science either. Sticking to your rules, about as cut and drawn as you can ask for. Hey, if it does this, do this. If it does this, do this. Right? That's not the hard part. The hard part is actually following through with your rule set because, well, we don't like to do that very much as humans. We tend to complicate things. And when you bring the market and this sea of data into the picture as well, it makes it even easier to get confused. So, that's what it's all about. It's about babysitting those demons on a daily basis because guess what? You never get rid of them. You just learn to deal with them. So getting into a habit like this where you satisfy those guys, it's the best way to do it. Keep them satiated. It's just like, when you get real hungry and you want to turn into a demon, what do you got to do? Well, you just got to take 5 minutes, get something in there. Then all of a sudden you're like, I'm better. It's like the Snickers commercial with Joe Pesci. But it's a different appetite altogether. So you're right on the money there. All right, so next on the list, boy, this little short kept on going. Living is doing some living to the downside today. So when we look at Holly's entry on this short play, we're going to see the same old song and dance, but to the downside, right? Now, of course, we got a nasty little opening wick here, a couple of them right here, but then looks like the stock gets a lot more liquid as the day progresses. So we can see Holly's entry here, and my chart is so. There we go. I had to squish it up a little bit to get the stop loss. Boy, that was a pretty big stop loss up there, wasn't it, Steve?
Sure was.
Luckily, as with a lot of these trades, it didn't even act like it was even going to go above the entry line here. So Holly gets short here, And once again, instead of the time stop being hit, Holly acted on her profit save functionality. Now, 5 reasons why she'll get out: time stop, profit target hit, stop loss hit, or she can get out on a profit save or a reduced risk if she feels that things are getting a little too wicky. And let me backtrack a little bit here, because the profit save and the reduced risk were originally designed just to keep her from letting a winner turn into a loser. So they're not the most advanced exit strategies, which leads me to my next point. The best way to work with Holly is to let her handle the entries, and we're better at handling the exits and looking from a technical standpoint on our charts. So that's our strong suit. Holly is doing all the heavy statistical lifting for us and producing the statistically weighted entries for us. So this is all part of, when you're mulling it over, going risk on or risk off, it's what the footprints in the sand price-wise are telling us. So Holly gets out of this trade early on a profit save. She gets in at 851.38. She gets out at 9:43, and on this one we can see the time stop on this one, 60 minutes. So just shy of that hour-long all time. So 11:24, we can see that she got out right during this downslope here, right? So 11:20 to 11:25, that's when Holly would have gotten out about right there. And as we can see, more cookies were on the table. So once again, Holly's getting out. The trade, took a little bit longer to catch here, but we're profitable immediately, hugging that line, which is very characteristic of some of these statistically weighted entries. A lot of the times they'll hug the signal line. This guy just happened to do it right below. And once again, when we see Holly getting out for 13 cents, the only thing we have to do is go, is it going our way? I'll easily peel out of 100 and continue to let the other 100 ride by doing the same thing that we did on the other trade, except this one's going down instead of going up. It's just another way to make money. All right, let's take a look at one more here, one more long trade. This one was on CRZO, which we in the community affectionately call chorizo, 31.37. Entry right here. We get a nice little pop initially and a retracement all the way back down to the signal line. So see, this one's just a little bit more stretched out, but it's acting in the same manner. Sometimes they'll hug the entry, go back and forth through it several times. But then kind of acts as a little support level and just bounces right back up. So on this one, Holly gets out, gets a little nervous as well, executes profit save for 11 cents, but another 30 cents on the table just by using a little risk management and deciding to accept a little bit more risk because the chart's telling us to do so. Now all these other trades, we had a little money left on the table on this guy, 8 versus 20. This one actually worked out better on risk off. And then we did have a small amount of losers today, even on the risk on side, not a whole lot to talk about. 30 cents was the worst one on risk on, 5 cents, 4 cents, and 7 cents respectively for the losers today, which on a day like today, where I heard a lot of people, talking about, well, I fell victim to the boredom trade today, and this was right about, a couple hours into the market. A lot of people saying the same thing about low volume, which is verified by just taking a gander at this guy right here. I was shocked to see how low the volume was today, but who needs volume when you got statistical probability? So to see Holly turn in $1.50 on the risk offside and a total potential of 4 points on 11 trades, I mean, that's a great day no matter how you slice it or dice it. So can't be more pleased with Holly's performance today, and a nice trade count where things weren't coming at you too fast and furious. plenty of time to look at all these trades and size them up. You know, this little guy right here, these guys came in close proximity, but other than that, you know, very manageable blotter and trade count from Holly today. All right, just keeping an eye on the time here. We're doing all right on time. So, somebody keeps bothering me there.
Somebody really wants to talk to you.
Must be very important. Okay, so moving right along here. That wraps us up for Holly today. Now, what I'd like to talk about next is one alert in particular. The good old NR7 alert. Because, you know, while the day is unfolding, you know, just like today, hearing a lot of people talk about low volume, I'm falling victim to boredom trading, you know, I should have just stopped when I was up a little bit, now I'm down a little bit, yada, yada, yada. Well, we've got a remedy for that. Her name's Holly. We all know about Holly. And we just talked about Holly. If you don't have Holly, you should seriously consider it. But if we don't have Holly, what are some other ways on a day like today where humans in general weren't seeing a lot of opportunity out there for obvious reasons? The statistical model told a different story. But what about some other windows that we could have been watching today to try to get a feel for what's going on out there, or just a nice setup regardless as to whether or not we got a slight upside or a slight downside bias? The reason I like the NR7s a lot is because they're micro consolidations. They're consolidations just like you think of in the historical sense, but they're just much shorter consolidations, and we can pick time frames. 5-minute, 10-minute, 15, 30-minute. So the thing about these NR7 patterns is that buyers and sellers for a brief period of time have equaled out. And the bars will take on a nice consistent look, and we'll get into some of those patterns in just a moment. But it presents very low risk entries because you're looking at a little consolidation. If you're going to take the upside, your exit's going to be right at the bottom. If you're taking the short side, your exit's going to be right at the top of that little micro consolidation, which is typically a nice risk to take on a move that is imminent. Now, the thing about NR7s is, I don't know if neutral is the proper term, because I guess you could say that about any alert that's out there, and then market conditions will dictate which bias takes over. But the NR7s, just because the bars are coiling up, all that's saying is a move is typically imminent. It's not saying it's going to go up or down, but of course we have to fold in a little bit of overall market dynamics to take that bet, or to pick that direction, or if we really want to simplify it, look at the daily, look to the left on the daily. All right, so this is going to kind of dovetail also into using our backtester, not to find something that you're just going to sit there glued to the seat and taking every trade, but how we can take what we think is a good idea, which I like to call high-quality information streams, and give us better odds of success from a manual standpoint, because turbo breaks up and down on the big caps, they're high-quality information streams. So when we're talking about doing NR7, maybe we want to stick to this same market cap to try to keep the thinly traded things out. So it's just as simple as taking something that you already have, like this guy, and duplicating it, easy. And then we'll drag him up here and go, okay, I want to keep the same filter set. Market cap 5.4 billion. Now for these guys, we don't need that accelerated 1-minute volume because that's typically not a characteristic of those patterns. You know, I typically like to have the 1-minute volume watching stocks hitting highs because I'm trying to find good momentum range breaks, and I want that good momentum. Here, not really necessary. Maybe you would find something if you tried to optimize by it, maybe not. Now, these guys right here, the reason I'm including earnings per share, simply trying to weed out ETFs and iShares without having to maintain a list, and since they don't make money, this is a good way to do it by de facto. Only the major exchanges, we can watch the entire universe since we're doing it that way. And we're going to uncheck our new high and go, okay, NR7 on the 30-minute. And the reason I picked the 30-minute is because If it's been doing it for 30 minutes, well, that's, in my opinion, that's a lot better than it's been doing it for 6 minutes or 1 minute, right? It's giving that pattern time to arrive at something that is visually appealing to human eyes. So just to give you an example of how prevalent these alerts are, there are a gazillion of them. And depending on which time frame we pick, I'll just pop back in here, 30-minute, but if we go to the search tab and we look, got the NR7 all the way from 1 minute to 30 minutes, right? And the characteristic of these alerts is if we're using new high and new low, you can see the times. You know, these can happen at any time. Whenever it happens, and you're going to get the timestamp down to the second. But if we look at the history here for the NR7s, you're going to notice one thing. Look, you get bulk delivery at the top of every time frame. We're using the 30-minute version, so you'll notice that all the alerts come out at the same time, but every 30 minutes, because that's when each 30-minute bar closes, and it can tell you if it's NR7ing or not. So if it was 5 minutes, we'd be getting reports, bulk reports every 5 minutes. That would drive us a little too crazy. Of course, you know, if you optimize well enough and get the trade count down small enough, still applicable. All right. You just got to get in there and figure out what time frame is best for you. Now, as we can see here, way too many alerts to try to even tackle. I mean, look, 11:30, we start here, and these all come out at the same time. So I mean, we'd be inundated. It would just be meaningless. So now we go about starting to try to make sense out of this by setting up a back test and going into the optimization tab. So over here, I believe I've got the same thing set up. Just want to make sure, right? Okay. And hopefully the servers will cooperate with me. I just wanted to give everybody a little flavor here of what would happen if we just tried to backtest these things. You know, how many crazy events would come through, and what would it even look like at first glance. So we can see it's backtesting everything. If we just bought it and went long with our eyes closed, every event, what could we expect? And as we can see here, the calculation's almost done. It is done now. As soon as it paints the screen, we can see, you know, way too many trades coming through, almost 3,000. It's not winning, all right? There's, you know,
it's ugly.
This all just looks ugly right off the bat, but what I like to do is just go to the daily. Now, of course, not where we want to be pitching a tent. Right?
Horrible distribution.
Yes, yes. And these bars, there's a lot more trades. It's just that these were so big, it's making all the other days look small, right? So I'm going to hit the old fast forward button and basically show you what I've done today. And then, by the way, this is all what we call a hand-curated optimization. So I started with those basic filters, and by the time it was said and done, you know, just me, Jamie, going through and doing what Holly does, but I do it a lot slower, right, is I came up with this filter set. So now we've got, let me just check my backtest results here. Okay, so through the optimization tab, I figured out that really the most productive time of the day for this specific set of alerts was to start taking trades an hour and a half into the open, which would be 8 o'clock my time, and a little over an hour window was the most productive time. So I figured out, hey, take trades between 8 and 9:13. Now, I'm going to go ahead and run the simulation here. That way we can get the odds maker results pulled up, and you can actually see the optimization tab that I'm referencing here. So obviously this is something that I've already cleaned up and is ready for public consumption, because on a 40-day backtest, only 141 events are coming through, and now we're in the green. 60% winners, a little over, and a nice 2-1 on average winner versus average loser. And when we look at the daily, this thing's not firing every day, but then again, that's not a predetermined thing that we can build into a strategy. A lot of people want that, but as Dan, our CEO, likes to say, well, you can want it all you want. That does not mean that it's relative or that it's ever going to happen, right? This is the event. This is what the results are showing us. So by looking at this optimization tab after that first big bulk scan where there were way too many trades coming through, I simply went to the time of day and, take care. These might have some high default values in there, like 100 minutes, which, if we were looking at this, we'd be like, well, what are we even looking at? We can break this down into 2-minute intervals if that's what we want to do, or, well, let's see here. Steve, am I seeing things here?
Yeah, you know what? I think I've seen that bug before.
Right, the gaps aren't coming through properly here.
Is it? I think I know what it is, Mr. Jamie. Do you have request numerous? I think there's so many returns in this particular strategy that it's having a hard time breaking down the day.
Right, but typically the way it would work. Let's see. Did I kill that other window? Here, I'm just going to rerun this. Oh no, that's the same one.
Rerun it without requesting numerous results. Yeah, I think that's how I did it last time.
Because I just want to give everybody an idea, a flavor of how we cut the bad ones off. Give me 1 second here. All right.
Because I did see this happen once before, and it seemed like it showed up when there was way too many thousands of results, and it was just clogging.
So just for exemplary purposes here, we'll stretch this out, and I believe I have the other one set for a 60-minute hold time and a 40-day back test. All right, so we'll let this one run, and then we'll have something to actually take a look at. And once again, the whole point of this exercise is to show you, okay, I have an alert window here. Hopefully, it's better than a 50-50 coin flip, because that's what we want. But with a little optimization, you can take a window that you're creating a high-quality information stream and get to a point where you're like, okay, I know that anything coming through here has a 60% chance of working, just blind. But with my chart reading proficiency and the technical skill set that I have, I can take that blanket 60% and with some proper chart reading, yes or no, I might be able to take that up to 70, 80, even 90% with a little proficient chart reading. So once again, using statistics with our technical skills. All right, so here's the bulk scan originally. So what do we have here? Almost 4,000 trades, nothing looks good here. And then, of course, we go to the optimization tab. And if we go to time of day, I think it's working properly now, Steve, for that hour.
If you're just sampling that 1 hour.
Right. So typically what happens is, well, you know what? I should have ran it not that 1 hour. That's the whole point of the exercise here. So give me one more second here. And then you'll finally see what I've been trying to show you for the past 5 minutes. Boy, these little 5, 10-second stretches, they seem a lot longer than they are, Steve, while we're waiting for the calculations to...
It's an awkward elevator ride.
We're in the time vacuum at that point in time. Okay, now we come over here.
Yeah.
Time of day, now we can see, okay, let's carve this up into 5-minute intervals, all right? So now we can see between here and here, we can see how the strategy does in each 5-second portion. So the ones that really stink, we can eliminate and only leave in what we feel to be the profitable events for the specific event. And so by doing this over and over again, optimizing time of day, price, maybe there's some correlation between the price tiers of the stocks and how well they do. Remember what I was talking about earlier. Sometimes these have some crazy default values in here. Well, right now we're trying to view stocks in $50,000 price increments.
Right.
Okay, a little off kilter. Now when we put in $5 increments, we can start, seeing things that actually matter. That even might be too small on an initial scan, but now we can see, each $10 increment, whether it's productive or not. Now these are very simplistic ways, but they can be good starters. Then we go to the other filters, and we start trying to trim off the trades that don't work for these guys. going to things like, okay, well, first off and foremost, let's go and see if there are any market correlations. When the market's going up or down, how are these things doing? So after doing this for a few hours over the weekend and working on a little bit today, this is what I finally ended up with. Notice I have the 3 asterisks, so I know it was my modified one. So after doing it for many hours.
Yeah, that's a lot of new filters you got in there.
And like I said, it took me 3 hours to kind of get this honed in. And there was never a guarantee I was going to find anything.
Yeah.
And that really is the takeaway from Holly. And what's going on behind the scenes every night is what I just did, probably times a million, right?
Mm-hmm.
Which therein lies that value in Holly. She's doing calculations that you just never would be able to do, even if you had a team of 10 people and even knew how to do it. Just no way you could do it. So after Jamie does his manual exercise here, and we're using the 30-minute version, and I'll just rerun this back test one more time here. And of course, optimum times.
Times optimized, yep.
Not even bothering to put in profit targets or stop losses because I want overall reports. I want to know what to expect from the ebb and flow of the symbols that are coming through here. And, everybody's a little bit different. You can do all the way up to 62 days. I prefer to always do about 2 months of trading data, which is 40 trading days. So keep in mind that what we have here is not a take everything that comes through it alert window, but if it looks good on the chart and the risk is in play.
So you took 3,000 trades and whittled them down to 141 over 40 days.
Correct. So we know that just anything coming out of here today has a really nice chance of working, and to even improve that even further, if it looks good from a technical standpoint, looking at the metrics that you and I and everybody else tell them to look at, then, you have to put some stock in that. And if we just kind of take a peek at some of the liquid names that were making their way through here today, we can take a look at the history here. All right, and of course, we stretch our time column out. We can always make sure that we're on the right day. So after the start time would be right here. So we see here VRSN, just double-clicked on it, and this is the flat area. Now we're looking at 5-minute candles, so obviously the past, this area is smoothed out on a 5-minute time frame, but if you really want to see it in the 30-minute time frame, we just go here and voila. All right. So once again, the signal comes here, and then we have a nice little opportunity to exit. Right? Now, of course, we never know which way these things are going to go. You can see PKX never really did anything. Probably would have had a little time to get out for a profit, but this thing just kind of inchwormed along all day. But there were some really good climbers today that came out of this guy. Looking at Texan, everybody knows who Texas Instruments is. Once again, this is the beauty. When you configure alert windows with high market caps, a lot of the times it takes care of the thinly traded issues. So, really nice entry signal right here on Texan. We can see the little 30-minute bar consolidation area right here. And, here, upside potential comes back down if you didn't take the cookies. But we can just keep going through these things all day. And we can see the nice consolidation on 30-minute. And then, of course, a lot of the times it will happen to coincide or be right before an event that we feel is interesting. Right?
Yeah, I prefer those longer time frames too on those types of setups, the narrow range setups. I think you're going to get a lot more false alarms and false triggers if you're doing 1 minute, and narrow ranges and things like that.
Sure. Mm-hmm. But the thing about these is, since we have this nice, these nice little bars here leading up to the pattern, if we are wrong, our risk is very low a lot of the times. If we go back to Texan here, here's the entry bar, so depending on your risk tolerance, we're looking at 30-minute bars here. Well, you want to take the low of the prior 30 minutes or the low of the last hour to be your stop loss. When I'm looking at range breaks on the intraday on the smaller time frames, If I'm using 5-minute bars, I look back 15 minutes before the entry, not including the entry bar, to assess my risk. Same thing here, just a longer time frame, whatever you're comfortable with.
All right. Hey, before we go, I had maybe two stocks just to mark up and watch. First one is MDR. It showed up on my washout bounce scan today. On the daily chart, it had a couple of really nasty down days on MDR.
MDR.
Put in a real nasty wick on the open today. If you zoom in there, you can see that. Nice hammer candle. I think if MDR takes out today's highs there, for those of you that have create price alert type of thing, you could create a price alert right at the tip of today's highs, and there could be some follow through tomorrow for a day or two. The other one that I've been talking about still on Twitter, it's an active trade of the week, but it's TrueCar, TRUE. If you go to the daily of TRUE, what you'll start to see is the beginnings of a horseshoe pattern. The horseshoe pattern can be fractal. It can be in a 15-minute candle, or those can be daily candles. Point being is it had really nice earnings, gapped up, was not able to really fully come in off of its earnings off that gap up, and now it's turning back and moving back towards highs on the daily there. So it's kind of putting in a bit of a horseshoe. For those that maybe want an early look at it, you could put a little radar starter size on it and see if it's able to eventually take out that 1524 level. But I just wanted to highlight that type of gap up, retracement, and back to highs that I call a horseshoe can be fractal in nature. They can work on 15-minute charts. They can also work on daily charts. So just a couple of ones to mark up and keep an eye on that I'm watching as well. We sometimes like to throw a couple of nuggets here at the end of the webinars for people to keep an eye on.
Right, and Steve, just like you were saying, get a little skin in the game. That way you don't forget about it, because it's so easy to forget about these setups if you aren't in them. Yes. And so there's no harm in you don't even have to do 100 shares if you set a price alert for the top of this candle here or the high of the day. Hell, it could be 10 shares, but it's going to show up on your blotter and it's going to keep you in tune with the position, right? Or use a price alert within trade ideas. If this is what we want to do, we just say right-click and use 1354. Right-click, or 1554, excuse me. This is why we devised this interface. This is why we added price alerts. If you want to use them for paper trading, that's great. More importantly, we don't want to miss out on things. So if you go through and set your price alerts for all your setups, hit the save button, then you're never gonna forget about it. That, or you get in the game and have it show up live.
Okay, so the people that saw you whittle down your NR7 bar, they would love to have a copy of that. All that hard work you put in over the weekend. If you want to do a cloud copy share with everybody,
absolutely.
He's going to drop it into the chat window there for you. There's about 3 or 4 people that were asking in the last 10 minutes, of course. And just click on the little plus sign there and you go to a webinar toolbox. It'll open up a chat window. I've already dumped in from prior requests. Somebody was asking for the horseshoe up and the horseshoe down. Those are in there. And then Jamie's going to drop in his highly optimized NR7 that he put some work in over the weekend.
Right, I saw this question come across about why we're using NR7s for intraday, and that's really their cup of tea. Longer consolidations are just that. But micro consolidations are it's just like the NR7 definition. If you go and read it in our help section, it's saying that a move is imminent. Doesn't mean it's going to be whether it's up or down is unknown, but it's just simply a good intraday metric telling you, hey, buyers and sellers are equal. Now either sellers are taking charge or the buyers are taking charge, and it's breaking out of this little micro range that's created, right? So it's just a really good intraday signal. A lot of the times people will try to configure things and will get discouraged because they'll have too many things popping out at once. Remember, these all get delivered in what we call a bulk system here. Oops, let me make sure I put the right, okay. Making sure I put the right one in the chat. But as you can see, if you were watching this one today, look how many would have came out at the same time, right? but they would all just be sitting there and won't be scrolling. So it basically just generates a list for you to scroll through as soon as you see the list get generated. So keep that in mind. NR7s aren't like all the other alerts. They're going to cycle out according to their time period. So if it's 30 minutes, every 30 minutes you're going to get a big dump like this, but that's okay because it's just going to sit there until the next 30-minute period. And basically what it's doing, it's an alert window, but it's really creating a list for you to go through. So I hope that makes sense. And yeah, Michael, we can deliver price alerts and text messages, where we can deliver price alerts as text messages and emails. You access that functionality through our website. Let me see if I can. It's under the account maintenance aspects of our website. You can set up SMS there. If you have any questions about that, just email info@trade-ideas.com and we'll help you out. All right, we're 5 minutes over, Steve. So, Scott, if you're waiting in the wings,
Yep.
We're ready to hear what you got for us.
Yeah, I guess I'll wake up then. Very engaged audience, lots of questions today. It's a pretty good thing that we went a little over. So we have a new podcast. We've launched it in December, and it's been getting a lot of support. So just want to let everyone know that they can find it by searching for Trade Ideas Podcast in whatever app you use. You can find it in iTunes, in Overcast, in Stitcher, iHeartRadio, TuneIn Radio, all kinds of apps. Just go ahead and search for it. If you don't find it in the app that you use, send us an email. Let us know where you want to find it. We just had a new one on Friday that's still available for download. Will be all week. And it was hosted by Jamie and Steve here. They did a great, really interesting one. Some good insight on evolution of data and all that kind of good stuff and what to expect from the markets. So go ahead and search for Trade Ideas Podcast, get that newest episode, and then you'll be ready as a subscriber to get the next one in your podcast app on Friday. So I mentioned earlier in the webinar that there is a discount code. That code is PROHOLLY, all caps, just like you see on your screen, and you can download this and some other information about today's webinar by clicking on the plus next to the handouts panel on your GoToWebinar interface. There's a PDF there for you to download with this code and the other information. And this code, when you put it in on checkout, takes 15% off your order total to save that off your first month or year of premium or standard. And even standard includes a full hour of one-on-one training. So both premium and standard, the first thing you want to do when you sign up is go look for that. Go to the support section of the website, click on training, and book an appointment with Steve, Jamie, or Andy and get that head start. It's part of our concierge service to get you going with trade ideas. And another important thing to check out as soon as you sign up is the trading room hosted by Barry Anderson, and that's open every day. So go ahead and find that and attend. Yeah, if you have any questions, email us, info@trade-ideas.com. You can reach out to Steve or Jamie directly, Steve at or jhodge at. Steve Gomez is at Today Trader on Twitter, and Jamie Hodge is at QuantBot. You can follow Dan Merkin at Trade Ideas 1, and we also have at Trade Ideas and a handful of others. If you follow us on Facebook, facebook.com/TradeIdeasPro, like us there to follow our page, and you'll see some original content that you can share out with your friends on Facebook to spread the Trade Ideas love. And if you have a billing question, you can reach out to us by phone during normal business hours on the West Coast. So thanks, Steve and Jamie. We will see Steve in tomorrow's Trade of the Week webinar.
All right, sounds good.
Yeah.
Hey, thanks, everybody. Appreciate you taking the time to come hear us, and good luck with the remainder of the week.
Yeah, any questions, just send us an email. Thanks, guys.